Well, welcome everyone. Thank you again for joining us for today's Appraisal Buzz webinar. We had a lot of webinars today in the appraisal industry, so we definitely appreciate your time here today. We'll be talking about the components of appraisal management training with Joshua Walitt of Walitt Solutions. Josh is one of our best instructors and the instructors in the industry in general. So we really appreciate the time. And Josh, I'll turn it over to you.
Great. Thank you so much, Jim. So thank you for everyone who's attending. I know, as Jim said, there's a lot of other things you could have been doing. So thank you for taking the time. So really, I want to be able to share some brief information with you today. This isn't obviously the full-blown training for all of the components that would go into an appraisal management company's or a lender department's training program, but we will go over the basic concepts and we're going to actually give you some takeaways. So I want you to leave today with actually some good usable content. So let's go ahead and get started. I do like to remind people that I don't provide appraisal management services. I don't provide legal advice, and so nothing in this presentation should be construed that way. But let's go ahead and get started. So today what I want to do is I want to go ahead and talk to you about really the training, the basics. The two items you see up on your screen are sort of the training basics and what are the main topics that people are looking for in this training. And we'll take a look at which are, what do we mean by people? What parties are we talking about? But we're going to look at the who, what, where, when, and why of the training, the basis of training. Okay, and it looks like you had a poll pop up and a lot of you have answered. It looks like most people on here are with AMCs. We have some lenders, we've got some appraisers, we've got some others. So great, we have a good mix of folks. So really this is training that is being presented to appraisal management companies by Walitt Solutions, as well as to banks and other financial institutions and lenders. So different training needs for different parties. And the bottom two items you see on your screen relating to independence, relating to revision requests and revisions are some of those takeaways. I wanted to make sure, again, that you leave today with something that you can use, something that is actionable, not just conceptual of talking about training programs and talking about what topics and things like this. But really, we are going to talk about, why are we talking about training? Why are we having this webinar? Why is this an issue? What are we supposed to be looking at? And then again, those second two items there on your slide, those are very abridged versions of some takeaways. All right, so the specifics in actual training, the learning content itself that I present and that perhaps maybe some of you present to your companies and organizations, that obviously takes much longer than a 45 or a 60-minute webinar, but you will have some takeaways, luckily. Okay, so first let's talk about why are we talking about training? What is the basis for training? Some of you may have training in your policies, some of you may not. Okay, it may be an internal policy. So for example, I have a bank client and earlier this year, I had a phone call from them and they said, in our policies, we require annual training on X, Y, and Z topics, and we're looking for a new person to do that. What can you do? And we had a talk about the scope of the training, and it really matched up with what I have to offer the various clients. So in that case, that was an internal policy. But we also have third-party oversight. So again, I'm looking back at our poll. And by the way, with the polls, we'll have another poll come up later. And then at the very end, there is going to be something you can click on for some additional information as well. So that'll be at the very end. But when I take a look at the poll, most people on the call are AMCs, but we do have appraisers, regulators, and lenders as well. When AMCs have contracts and agreements, service level agreements with their lender clients, many times they are agreeing that the AMC is providing training to their staff. And so certainly we want that to be carried out, right? We want that to be a true statement when it's sworn to in those agreements. So it could be covering UDAAP. It could be covering valuation independence. It could be saying, well, you need to cover certain data security items, right? So it varies from client to client. It's very important that training policy be handled top down, right? When those contracts and when those negotiations with clients are being handled, we really need to have an eye on training, what is required, along with obviously other things. And then finally, we have at the top of the slide there, statutes and rules. And for AMCs, that comes from the state level. And for lenders, it's coming from generally the federal level. So we have certain states that require certain prescribed, very, very specific components. So there are actually states out there who will say, we're not talking about the USPAP class, we're talking about maybe certain advisory opinions, maybe certain content within the USPAP publication that they want covered, which isn't necessarily covered in every USPAP update class. So you have some states saying your staff needs to take the USPAP class, the update class, and then you have other states that say, hey, you need to teach on certain USPAP components, and they do not necessarily overlap. So you need to make sure you cover those. Okay, so if you're handling those, make sure you're taking a look at which states are you operating in and which are the necessary components that you cover. Other states speak to valuation independence training and leave it up to the AMC to create that or find that. Maybe it's required relating to assigning appraisals or reviewing or otherwise screening reports when they come in, or handling complaints. Or other states just simply say, you, key person, you, controlling person, you need to ensure that your staff is properly trained. What does that mean? So there needs to be that moment where folks sit down and say, okay, well, what do we need to be doing? What do we need to be addressing? Okay, so again, this isn't USPAP training. Some of you know me, I am a USPAP instructor, I teach USPAP, but what we're talking about is some very specialized training, and we'll look at some of the training topics. We'll look at a sort of outline that you might go by to figure out, you know, what should we be addressing. Okay, now we talked about internal policy, we talked about state requirements, we mentioned client expectations through service level agreements. So we have another sort of list we might compile, right? This client requires UDAAP. This client over here requires ECOA and fair housing. This one over here talks about valuation independence and revisions. This client mentions security, or maybe you have a client that asks you to complete a 200 or 300 question application or process, and maybe you have to do something similar every year to renew it. And if you're one of those compliance people at an AMC, you know exactly what I'm talking about. There's going to be about 6 or 7 or perhaps 8 or more questions that relate to training. Okay, so I've actually sat down with clients before and you say, okay, well, let's take a look at your service level agreements. Let's take a look at your renewal processes. Let's log into the platform and see what you promised your client, or see what they're asking you in order to renew and continue providing services for that particular lender. And we're going to spot and say, you know, they're going to ask, hey, do you train on this topic? If so, provide the policy. Or are these people receiving X and Y type of training? If so, attach certificates documenting that training, right? So sometimes I do find clients saying, well, you know, we have this on-the-job training over here. Okay, that's fine. Let's take a look. Let's take a look if that's adequate, if it's really delivering what you think it's delivering. Let's see if it matches up with these client expectations and, in other cases, the state requirements. And let's see what's missing. So it's not always a one-size-fits-all answer. I have customized, in certain cases, I've had a client, a banking client, they had non-appraisers on their staff. They said, you know, our policy says that we have USPAP related training every year. So we looked at what I had. They said, well, you know, we love it, but we want a full day. And so we supplemented to it. And you might find that your training is different than other AMCs and other companies' training, and that's okay. There's nothing automatically wrong with that. We just want to make sure that what you're doing is adequate. okay, is meeting the needs of your clients and the states in which you operate. Okay, so the topics that you're going to cover, I've just put a few here, some of the hot button ones, and we'll actually take a look at sort of an outline in a few slides. Valuation independence is obviously a big one. That's a really large umbrella, okay? So we're not saying, okay, these 3 people in the company should be receiving valuation independence training. Really, when you take a look at what valuation independence includes, what it actually touches on, it's actually a very top to bottom type approach, type requirement. So you're going to take a look at, you probably have to be providing adequate training to a lot of people. Doesn't mean you're providing identical training to everyone, but it does mean that there are training requirements that you're going to want to document. You're going to want to be able to produce the evidence of training occurring with a lot of your staff, not only the person who is assigning orders, not only the appraisers who are reviewing reports when they come in. That's a very, very narrowed focus, and valuation independence has a very wide focus there. Okay, so we want to make sure we don't have such restricted processes that we're you know, kind of missing out on some folks. And keep in mind, we are not providing this training simply in order to check off a box, right? We're not providing training so that we can say, yeah, we did it, right? The purpose is not to show to a state. The purpose is not to show to a client, although we have to do those things. The purpose is to make sure our staff are properly trained and they're ready for various scenarios, right? So for example, under valuation independence, we do have you know, panel management. Okay, how are we managing the panel? How are we adding people on? Are we getting them to certify to certain things that states are requiring? Revisions and reconsiderations. That is perhaps one of the hot button issues, and we talk about scenario after scenario in training, but that's not the only piece. Really, we want to be touching all staff with this training who are appraiser facing or appraiser impacting. Okay, so I drop onto the second line there. Payments is a really good example of that. Okay, payments is an excellent example of, they may not actually communicate directly with an appraiser. Perhaps they do. However, payments are one of the hottest and most black and white regulatory issues when it comes down to AMCs and appraisers interacting, right? As an appraiser, I can find out if my AMC has paid me in time, right? I either received the check or I didn't. I either received the direct deposit or I didn't, right? So even though that accounting person isn't necessarily calling me up, asking for statuses and things like this, isn't messaging me, perhaps they are in certain circumstances, but even though they're not directly often contacting and communicating appraisers, they have a huge impact on the success or failure of the company. So it's very important that you really find all of the applicable people and get them into the appropriate training, okay? So USPAP is another big topic that is handled, various scenarios. So again, it is not a substitute, what we're talking about here, for the USPAP 7-hour update course or the 15-hour initial USPAP course. This would be where certain states, they don't say, hey, take the 7-hour, although some states do say that. This is where we're talking about, hey, you need to look at certain components. There's certain advisory opinions or certain topics. And what we really try to focus on are scenarios so that appraisers and appraisal management companies can talk. It's all about communication. No matter what you're talking, no matter what the issue, we need to be able to speak the same language. And many times we find AMC staff and lender appraisal department staff or lender underwriting staff are not speaking the same language, or they don't understand the language of appraisal or the language of appraisers. Okay, so that's pretty key. Obviously, panel management, we're talking about adding and removing. Okay, what types of processes do we have in place? What types of statements can we and can we not, or should we not make to appraisers, which might indicate we're taking certain panel management steps, like threatening to remove them? Oh, when should we say something like that? Should we ever say something like that? Could it be misconstrued, right? So we want to really have staff that is strong in that way. Fairness and bias is obviously on everyone's radar right now. And there is a module in the training on that. It doesn't take place of more robust, longer training on that, but it does give some of the background to the regulations. It also, we want to focus on real world scenarios, right? Real world scenarios. And finally, you can see their appraiser selection is obviously big as well. That's a huge part of interacting with appraisers. It's a huge part. There are certain state regulations. Obviously, there's expectations from clients and how that's handled. So these are some of the main topics that you would want to cover. And really the focus when we're talking about USPAP versus valuation independence, because I've had people say, well, what's the difference? Why can't I just take USPAP? Well, first of all, because it doesn't cover some of the content that is being asked by clients and by other states. Really, we try to connect it. We try to draw a line between valuation independence requirements and USPAP, because it's amazing when you start looking at it. The requirements are really two sides of the same coin. Okay, we take a look at aspect X over here, the requirement in valuation independence, and then when we get to the USPAP section, we're saying a similar requirement or a similar standard, except it's speaking more to the appraiser and how they handle that aspect. And so really, this is about understanding perspectives as well, not just understanding specifics of regulations. We're really looking at how to communicate in the real world and the real world scenarios and how we can handle those. So we talked about not limiting it and the danger of limiting it. So you do want to make sure that people are receiving the appropriate training. Doesn't mean it's identical for every single person. Okay, but I do get questions. Well, Josh, who needs the training? And I say, well, let's put everybody on the table, and we can start removing some people if we really feel they don't. We don't want to say it's only appraisers that are getting it or only non-appraisers. That has nothing to do with it. But we are looking at risk managers, quality control people, salespeople. Just had a month or two ago a bank I was providing this to, and they had their salespeople on there. Right? What should I and should I not be saying? And let me understand the big picture, right? Even if it isn't perfectly applicable to everything I do every day, I understand that big picture, right? Any sort of managers, the controlling and the key people, these are the people named on the AMC's applications and renewals with states. They need to have this background. They need to have this understanding. And certain states, like I said, require training, and they will actually spell out who should have that training. Coordinators of the orders, assigners, possibly the accounting people we talked about, panel managers, and there could as well be others. I want to remind people the training, we're not doing this to check off a box. We're doing it so they have the knowledge that is necessary to do the appraisal management services correctly, whatever aspect and role they have. Okay, so who conducts it? Obviously, many of you know I conduct this type of training. There are companies that do in-house training. You want to make sure the person who you select is qualified, has a background in understanding USPAP, and has a background in understanding the requirements in terms of regulations of states, and then the expectations and requirements of clients. So, just make sure you've got someone who's knowledgeable, who can give the answers that are appropriate and not lead any staff down the wrong way. Another big question I always get, so we'll just head this off right now rather than waiting to the end, how long? Well, it really does depend. It depends because we're talking about different modules, right? Some companies decide to handle the bias and discrimination in an entirely separate course, entirely separate session, and so it's not being included in this annual training we're talking about, right? So it's a little shorter. Others say, well, I want to add more, like the example I gave. We really want it to be very USPAP heavy. I really want my staff, especially these non-appraisers, to understand USPAP better. And so then maybe it's a little bit longer. So you really want to have it long enough so that it makes that imprint, so they have top of mind awareness for the key items in their job role. Okay, so they understand the impact that they have. And another common question, how is it delivered? Well, I actually have a self-paced online version that we just got up and running within the last month or two. It's been very successful. A lot of companies like it because it's self-paced. You don't need to lock away your staff for 5 hours and not have them on the production lines. You can just say, okay, over the next 4-month period, all of this list of employees need to take this training. Here's your sign in and whatnot. But a lot of companies, a lot of my clients really like some sort of live version though. So you have to balance. You've got to figure out. Some have, live online for the annual training, but the new hires take the self-paced online version so that they can just fit it in, and they're not having 2 people in a class, right? And then the online everybody attends live or something like that. So there's different ways of doing it. What's key to remember is in most cases, or I want to say in all cases really, this is not CE, because you're training a lot of non-appraisers and non-licensed people anyway. So this is not a CE, continuing education credit gaining class, okay? The biggest takeaway that I can give is, I'm going to put up another poll here, training plan. Okay, and I think you should see that poll there, and I'll rely on Jim. Maybe he can see if I press that button right, but a training plan. So if you are in a position at an AMC or at a lender to take a look at policy, you want to ensure you have a training plan in place. This is going to be deciding, okay, who, when, is it an annual or some sort of other periodic basis? Is it for new hires? Well, within what time frame should the new hire have it? In some cases, you may have to look to the state requirements or client expectations to figure out and make a really good judgment call on, well, how long should we wait until they have this? Is the on-the-job shorter training good enough for the time being, or should we have some sort of other option where they get the full training, right? So again, it's not to check the box. It's so that they're ready for their job, so that they can fulfill the expectations of their job. So let's take a look at the poll results. It looks like, so the question is, what training do you take on a regular basis, for example, annually or every 2 years? And it looks like we've got a quarter of the people, of course, you could choose more than one, so these won't add up to 100%. Quarter of the folks answering said they are required in their jobs to take the 7-hour USPAP update course. Let's say about 20% are required to take some sort of valuation independence or appraiser independence. That's required by states in some cases, especially as it relates to assigning and reviewing and screening and other general topics there. So that's surprising. About 15% saying some other USPAP related course other than that 7-hour USPAP. Fairness and anti-discrimination, about 15%. And other sort of professional development, sort of in general, miscellaneous type, about a quarter of the respondents. And then about 3% said they don't have any requirements in their job to take any sort of periodic training. So interesting results, Okay, so let's take a look real quickly, and then we'll move on to some takeaways. It's just some real guts of actual material that we might see in a course. This is sort of an outline of valuation independence. What might we see in this type of training? What are clients sort of expecting? What are states perhaps expecting? And what also has a best practice aspect? Because we also need to take a look at a lot of best practice pieces that are going to support the overall endeavor of trying to achieve that valuation independence and not violate rules, not violate client expectations, not violate any laws or anything like that. Okay, so basically having that regulatory basis understanding, having that background of why are we talking about valuation independence to begin with, right? Having communication standards, and we'll look at that briefly as we move into some actual takeaway and actionable knowledge you can take today. Achieving compliance. Achieving compliance, is that our goal? Well, achieving compliance is one goal, but also being able to demonstrate that compliance. We need to be able to document in message logs the full story. We need to be able to document in any other notes and the documents that we save themselves. We need to be able to tell that full story. I must mention, numerous times, in 2 days, in 2 weeks, in 2 months, what about 2 years from now? Are you going to remember the full story? Or better yet, is someone else going to understand the full story? What if you're on vacation, right? Someone else may not be able to understand what went on with that order. So that's a really key piece, is not just achieving compliance and being able to say, yeah, I did everything right, but we need to be able to see that you did it correctly, right? Assigning appraisers. We want to take a look, of course, at prohibitions. We know that truth in lending. We know that the GSEs. We know that HUD. We know that all the states have endless lists, and we'll take a look at some of them, of prohibitions. Regulations are really good at telling us what we can't do. And then we'll also take a look today as a takeaway, so you'll leave today with some actionable items. What is allowed? We'll take a look at some allowances of what not only can we not do, but what can our staff be doing. Certifications and agreements, understanding who is promising what, where, what can we ask for, what can we not ask for, understanding really the perspective of the parties, especially the appraiser, in terms of what they're agreeing to. Handling complaints. States require this very directly. Revisions, reconsiderations. Obviously, we will take a look at that today in an abbreviated fashion. Panel removals, mandatory reporting to states. So, how can we compliantly perhaps remove someone from the panel? And that's an uncomfortable situation to have. It's not something that should be done lightly, but there are certain steps that need to be taken when we do that. And a lot of the time that goes along with mandatory reporting, perhaps not every time, but there are times when mandatory reporting is mandatory. It's required in certain cases by states, and that actually varies by state. So taking a look at that's important. Compensation to appraisers, and then real world scenarios is really important. I won't dwell on this slide much because we already talked about kind of what might go into this type of training for USPAP overviews, but really focusing on that real world scenario, or real world scenarios, I should say, so that the communication is understood, so that the language can be spoken between these two parties, the appraisal management team, or someone at the lender, or someone else at the AMC, and the appraiser. They understand each other. And then, of course, I mentioned these as well. Fairness and discrimination, really taking a look at what do Fannie Mae and Freddie Mac expect? Because a lot of this, I suspect this, or I'm not sure of this. Well, some of it can be solved by writing and an AMC expecting reports to have factually based conclusions and factually based explanations and support. For example, comp selection, adjustments, and things like that. So what can we be looking for as an appraisal management team to feel like and believe strongly that the work coming in is free of discrimination based on religion, or based on race, or based on what were all these decisions and moves and steps of the appraiser based on? Oh, these facts, these market data points, right? That's what we want to be looking for. So I want to go into prohibitions and independence. This is one of the takeaways. So that's pretty much kind of the overall of the who, what, where, when, and why, and kind of the overview of the topics. So if you are performing those, or you're looking to perform those are some key items you need to take into consideration when you're taking a look at what should I be training, who should I be training, how often should I be training. Those are a lot of moving parts, and you need to figure out what's best for your team, what's best to meet your future clients' needs, and perhaps What do you need to meet your current clients' needs and your current state regulators, right, needs or expectations? Okay, so let's take a look at prohibitions and independence. Like I said earlier, regulations are really, really good at telling us what we can't do, right? And we'll take a look at what we can do here as well. What we're talking about when we address valuation independence, which is, a huge, like I said, it's a huge umbrella topic. We're talking not only about those independent contractors that you're going out on your independent contractor panel and things, but also appraisers who are employees, who are on staff. Okay, we can't violate valuation independence with staff appraisers. We can't say, okay, chief appraiser, you're reviewing, Julie Smith's appraisal. You're reviewing it, so I need you to come in and say that it's bad, right? No, we can't do that, right? The valuation independence comes down equally on contractors as well as staff. All right, so we can't influence it in those ways. So let's talk about what the main idea of valuation independence is. So this may be new to some of you. This may be old hat to others, but let's take a look at all of the factors, all of the pieces of valuation independence. There's a lot of moving parts here. We cannot directly or indirectly, and that means we can't tell someone else to do something wrong, because that's indirectly. And we also can't do something that on its face is innocent and fine, but we know there's going to be another consequence. That would also be independent or indirectly. So we can't directly or indirectly influence or even try, just attempt to influence. The attempt itself is a violation. The development, reporting, or review of an appraisal. Okay, so the homework is the development, the research that goes in, the reporting where they actually issue that written report, or the review where you might hire someone to do an appraisal review, or maybe your staff is doing the review. We can't influence those or attempt to influence them through extortion, collusion, compensation, keyword instruction. Let's keep that in mind as we move through these slides. Inducement, intimidation, bribery, any other manner of coercion. And that includes the action or the threat of withholding payments or future business. Now, keep in mind, we can if there's been a breach of contract or there's a substandard performance of work. So compensation can be withheld in certain situations, but you need to let staff know who should be making those decisions. Right? We shouldn't be throwing around, threats of withholding payment with every or perhaps all or a large group of employees. That should reside with a very limited number of people. You can't demote or terminate in order to influence or attempt to influence. You can't promise bigger and better compensation or promotions. You can't say, well, I'll give you this assignment if you come in at a certain number, you have some predetermined value. And then others, we won't go in. Again, this is overview. This is a very abbreviated, condensed version of this training topic here. Ordering second appraisals, unless there's a bona fide reason or there's a policy that says for these types of situations, we're always going to order a second appraisal. Disregarding the appraiser, especially in terms of them telling you they're not competent or they don't have experience somewhere. Cannot use an appraiser's signature, can't change appraisal reports, can't require certain types of indemnification where it basically holds the appraiser responsible for the errors of the AMC or the lender client. And you can't limit the communication of the appraiser. For example, you can't say you can't talk to real estate agents and you can't talk to the city or the county assessor and things like this. They need to be able to talk to the parties that are common to that type of business and type of appraisal. Okay, unbiased, impartial, objective, and independent functions of the appraiser must be protected. If there's anything that's impairing it or attempting to impair it, then we probably have a problem there. Okay, we'll take a look in training. I would encourage you, if you are coming up with your own training, have a lot of examples. Make this real to your staff. Right? We don't want it to be something that is sort of this conceptual type training. We want real world scenarios. So your folks really know how to act when it actually comes up, when they get that phone call, when they get that message, when the scenario pops up on one of their orders. Okay, the overall idea is manage your panel. That's the key. The first key is to manage your panel properly. If you don't have good panel management, you can't have a good second step, which is then to assign an order and let them do their job independently. Because if you don't have confidence that the panel management is working right, you're having people who are maybe not qualified, not competent, not writing good, thorough reports that have explanations and so on. So you can't have confidence that that second piece. So we want to have good panel management and then let them do their job without interference. That's the idea behind valuation independence. But there's a lot of other offshoots. We looked at a very small, basically an introductory piece here on the basis and the overall idea. Then we want to look in, well, how are payments impacted? How are revision requests impacted? How is X, Y, and Z impacted? So let's take a look at revision requests real quickly. I always train them to the 3 C's. You can, we looked at what you can't do. You can, and this says must, but if you are making a revision request, it must meet at least one of the 3 C's: clarify, correct, or consider. Okay, they can clarify, add additional explanations. They can correct anything that's black and white that is wrong. And they can consider additional information like property information or additional sales. We can't place limits on their research through revision requests. So just like through the engagement letter, we also can't. So we can't say you cannot look at this type of sale or this type of property as a comp. We can certainly ask for them to provide more explanation for why they chose these comps, but we can't tell them, no, you can't use that comp, or you can't include this adjustment or something like this. Revision requests cannot simply be based on wanting to increase or decrease the value. We know that reconsiderations, that's what it is. We know that's where it comes from, but a loan officer, a real estate agent can't submit through the loan officer something that says, we know it's higher. Because the question is, and? What evidence do we have, right? What do we have to show that? What are you basing that on? What can we ask the appraiser to consider? Okay, and revisions also obviously cannot violate any of those valuation independence provisions that we took a look at briefly here in that abbreviated training. And one of the questions I always bring up is related to underwriters. Just because an underwriter is making a request, just because that underwriting guideline is in place or that underwriting policy is in place, that doesn't mean that it works within valuation independence. You may still have to translate their requests. So we want to make sure we are not blindly forwarding on revision requests. And I have seen this. I have seen this from appraisers, and I have seen this in AMC message logs where you can see evidence that let's say the lender or an underwriter or loan officer requests, and it just gets shuttled along, pushed along to the appraiser, and it is not a good request. It violates valuation independence. So we want to go through a process with staff so they understand, how are we evaluating these requests? Are we retaining it, translating it? We spend a lot of time in training. I would encourage you, if you are providing the training, translation tips. Meaning, okay, I get it in, it says this, can I make something of this, right? Can I submit this in any way, shape, or form to the appraiser? Or is it sort of, it's just not good? Okay, it's just not good. I cannot ask them anything related to this, so I'm not going to even send this on at all. So we need to have that. So just a few sort of examples of kind of the scenarios we run through. And for those of you who have taken training, and I do see a few people on here who have taken training from me before. I teach USPAP, I teach other courses, I teach obviously this type of training, and I am really big on asking a question, and then I'm just going to close my mouth. I'm going to wait for people to actually go ahead and answer and discuss it and talk about the time they dealt with something like that. And we're going to actually get participation. So I'd encourage you, if you're designing your own training, you're performing your own training, make sure that you give enough time for discussion, real world discussions. So that means you're quiet and they are taking over some of that, that conversation. So in this case, the client is asking, you know, here's a few comps. I want the appraiser to include them. And the coordinator, that would be maybe someone in the loan, the appraisal department at a lender. Maybe it would be at the AMC, and they simply say, okay, well, we're returning this appraisal to you, appraiser, and take a look at the uploaded comps as a basis to adjust value. And we take a look at, you know, do we like this or not? What do we like about it? What do we not like about it? And really, we don't want to be talking about using comps as a basis to change the value. Yeah, we understand, but we can word this a little bit better, where we're not making it sound like, hey, use these to change the value. And we can say, look, they're disputing the value. Can you take a look at these? But there's certain ways we can say these things a lot better than here, we're looking for you to adjust the value. Okay, so we're not looking to manipulate it. We're saying, look, we need to ask this in such a way that the appraiser's independence is preserved. We're not telling them what to do. We're allowing them to be independent. Because if we're instructing in order to influence or attempt to influence, then we may have a problem in certain scenarios. Okay, we talk about what documentation we need. In this example, of course, we would want to see the contract, changed contract, or perhaps something was a typo. We want to explain things. We want to make sure we're not asking for changes that are already in reports. We want to be sure we understand the request and we're not just simply shuttling it off to the appraiser. Okay, so here we have one where the client is saying, look, I need the appraiser to provide a new comp with more similar characteristics to support the 310,000. The coordinator goes through, translates this a little bit better. Okay, we want some additional comps. If not available, please comment, and we talk about maybe how we could even elaborate on that. What do we want them to comment on? So we want to make sure that we're not asking for a revision and it's vague. So then when we get the report back, we find out, wait a second, this doesn't have the detail we were looking for. This doesn't have the explanation we were looking for, right? So we want to be very clear in the revision request. So what do we mean by please comment? Do we want to know what searches they conducted? Do we want to know the results of their searches? Maybe, you know, in terms of number of sales. We don't need to know every sale. We don't necessarily need a list of all those sales. And then do we also need maybe a comment on why did you include the comps you included? Right? And if there's scarcity for any reason, explain that, right? So leaving something open in terms of comment, yeah, we can ask for comment. That's fine. There's nothing wrong with that. But is that the best practice? No, it's not the best practice, because you're going to need to ask for another revision. You're going to say, okay, and now can you explain XYZ, right? We want to get that done for the underwriter one time, not waste our own time, not waste the appraiser's time, because they're out in the field. And they might get back at 5 p.m. and they're going to get to your request tomorrow. They're going to answer it. And now it's going to be another day if you have the need for more clarifying items. Okay, we can't ask for verbals. This is one item we didn't go over because this is abbreviated training, but that is a key point. We cannot call them up and ask them for, you know, that preliminary value. Okay, before they're actually assigned and agreeing to perform it. And we need a written value according to lending regulations. It cannot be a verbal. It needs to be an appraisal report that is written. Okay, coaching on what type of remaining economic life we want is just one example. We don't want to be sort of telling them what answers we want on a report. That can be very problematic, obviously. So, you know, we want to be sure that we have confidence in our staff that they are not writing the appraisal report, right? Who's writing the appraisal report? Well, first we have that good panel management, and then we let the appraiser develop and write the appraisal. Okay. Best practice here, clear communication. How many of you just think to yourself, you know, you're out maybe on some of those Facebook appraiser discussion groups sometimes? I always take a look. I try to actually make fewer comments nowadays because it just seems like there's so much, you know, just contentious discussion. But I can't go a week without seeing comments about how a lender or an AMC sent back ridiculous worded revision requests. They were absolutely crazy, bad spelling, didn't explain it. You couldn't understand what they were asking. So we want to rise to the top. Again, with that appraiser being out of the office for a day, perhaps out in the field, they're going to answer the ones that are clear, that are concise, that are easy to read, that are easy to understand. So you want to be that cream of the crop. You want to rise to the top. And we talk about, and one of the biggest pieces we usually start off the training with is the retention of all communications, emails, documents, phone calls, all of this. We want to retain that information in the logs. So again, we don't run into that 2-day, 2-week, 2-month, 2-year issue where someone's on vacation, or maybe they're no longer there, or you just don't remember and it was your case that you were working on. So we want to make sure that we're not running into those types of problems of not understanding the full story. I should be able to walk into your company and say, can you open an order? Obviously, we'd have some sort of confidentiality agreement, and I would look and I'd say, yep, I understand everything that went on with that order. And that's really the expectation. So I'm going to go ahead and make sure we have time for questions. I went a little bit over in terms of the presentation itself. I'm going to wait for some folks to type in. I actually had some folks email me saying, because we did know there were some other webinars and events, and I had one or a few people that contacted me, and I've gotten this question from AMCs as well as lenders when I present to them, and that is, what if an appraiser asks for advice, right? Or what if an appraiser asks for instruction? Well, you know, I just got done telling you, no, we're not supposed to instruct, right? Really, we're really not there to train the appraiser, right? No matter if you're at an appraisal management company or you're the appraisal department at a lender, or what have you, we're not there to provide training to them. All right. What I would recommend, let's say you send them a revision, for example, and you say, we need more information on that $50,000 adjustment. Where'd you get it from? We don't want a novel. We don't need to know all your math. I mean, that's not the expectation, but we need to know, what did you base it on? What research did you do? Kind of give us an idea of why it's reasonable, right? Where did this come from? What methods did you use, right? Well, what are you supposed to do? Are you supposed to help them develop and write develop the appraisal and write the report? No, you're not supposed to, but we might suggest, well, you know, I've seen in other appraisal reports where they use methods like paired sales, and they use depreciated cost, and they used regression, and they used other, you know, you're going to need to figure out, what did you do? And then give us a short summary of what it was that you did, right? So we want to ensure that we are not responsible for the development and writing of that report, because then all of a sudden we're the appraiser and we didn't manage our panel correctly, or we didn't let them do their independent job, or perhaps both, right? So that's a key, and I get that a lot, and I know that does happen just in my past roles. You do get those calls depending on your position. So let me take a look at some of these that have popped up. One is about an employee of an AMC. So can an AMC accept an appraisal assignment and give it to an employee of the AMC to complete? The scenario is the AMC tries to find an appraiser, but they're all busy, state they can't do the appraisal for a certain long amount of time. but an appraiser staff appraiser is available, can complete it in maybe a shorter amount of time. So AMCs are allowed to assign orders internally to staff appraisers. Okay, there are appraisal management companies that are what you are sometimes referred to as hybrid appraisal management companies, and these are ones that have contract appraisers. In other words, outsourcing to, and that's maybe the traditional model, you might say. But then there are AMCs that also have staff appraisers, or perhaps they only have staff appraisers. And it has to do with different categorization and how there are different ways of interacting with those different roles. So AMCs can assign to staff appraisers. Okay, there's nothing wrong with that. So I hope I've covered that question. There might be other nuances, and you could go ahead and contact me if you wanted, if you had further questions on that. Let's see. Is this recorded? Yes, it is being recorded by our host, Appraisal Buzz. So thank you to them. And they will make it available. You can contact me to find out other details if you do need that. People are asking for additional information or information, kind of mirroring kind of what we talked about here. There is going to be, when we complete this, as I briefly mentioned, there's going to be an opportunity for you to request more information. You can submit questions, you can submit comments. There's whatever you'd like to provide. There's going to be a link that pops up at the very end of this when we finish, and that's the one I mentioned with a coupon code. You can get discounts for certain types of training, but you can also request other information at that time. So request or requirements to remove an appraiser from a roster. Well, to go into that, I mean, that's not necessarily something for a quick Q&A here, but you are right to question it, right? That there are some very prescribed ways. So we do want to recognize that there are administrative or sort of logistical, we might talk about, reasons. So in certain cases, maybe the AMC has too many appraisers in a certain area. And they're like, we don't need to manage 20 appraisers in this area that we generally are only using 10. And so there are administrative reasons where they can, across the board, take a look at their panel and reduce and remove. There are also other scenarios where it would be for performance of service, perhaps quality of service, and there need to be everything that's documented. There are other cases where there may be situations where there was disciplinary conduct filed with a state regulator, and there was actual discipline, not just a complaint, but actually discipline that took place. And that AMC, or perhaps that lender, has within their contract with the appraiser. So it's very important to have very good and understandable and clear contracts with appraisers. And it may say, look, if you have disciplinary action, we have the right to remove you. And there's generally, I'll give you some generalities here. Generally, anytime you remove an appraiser, there's going to be a rebuttal opportunity for an AMC to give them. And there's going to be written notice, because obviously they're not going to know about it, and they're not going to know to rebut it if they don't get written notice. So there do need to be those processes in place. There's good templates. There's good standard language. This is not, since you bring up removing an appraiser from the panel, this is not to be handled by one person. This is not to be handled by large groups of people, right? You're going to have very specific people that issues are escalated to, and you're going to have a process in place for QC, for communication, for conduct, where they all know when does something need to be escalated. And it might relate to mandatory reporting to states as well. But then there is going to be, most likely, in most cases, a committee, unless it's a black and white, if this, then that, and it's a very clear-cut case. There could conceivably be that. But most of the time, there's going to be a committee that then says, let's look at this issue, let's document our reasoning, and then we're going to follow certain prescribed procedures there. Another one that popped up, let's take a look. If an AMC or a lender receives an appraisal that they feel is not credible, can they document the reason why the appraisal was not credible? Just want to see this. Yes, so they would obviously, they would want to document why they believe it's not credible. Many times I advise AMCs that this is going to be a discussion you have with the client. Okay, you do not want to be just unilaterally ordering second appraisals, because remember, there is, and keep in mind, this was a very abbreviated piece of training that we took a look at in this second half of the presentation, right? So that was not okay, here's the here's the way to deal with second appraisals. It was just one quick bullet point. There are a lot of considerations that go into it. You do want to document it. So we want to take a look at deficiencies that are documented. That would be a legitimate reason to work with the lender to determine whether or not a second appraisal is being ordered. There would also be cases of where it's a bona fide procedure. I touched on this a little bit, where perhaps for certain loan to values, perhaps for certain loan programs, there is a policy in place that requires a second appraisal, right? And so let's say an AMC gets a second appraisal request that comes in on the same property. They might have a practice to say to the lender, hey, do you understand you have two that you've just ordered? Or perhaps they don't. It depends on the AMC and lender relationship. And they might say, yeah, we have it, right? But it wouldn't be up to the AMC to generally make that that decision in terms of lending protocol, unless they have that in the contract with the lender and they understand, in what cases does this second one need to happen. So another common question that I do get is, should an AMC require a revision request worksheet? So we talked about revisions. We do mention in the full-blown training revision request worksheets, and generally it's sort of a best practice. But obviously on very simple revision requests, they're just very straightforward. They're not long. There's not a lot to them. Perhaps not a revision request worksheet. Perhaps so. Perhaps maybe it's an online portal that it's submitted through. Other times they may have protocol in place where it is required, but the key behind revision requests and any sort of worksheets or forms that are required is that the AMC should not be accepting those from parties who are not the client, from non-lender clients, right? So let's say an agent is given that form by the loan officer, and that agent submits it to the AMC. This is, okay, thank you very much. We'll make a record of this, but you need to get this to your loan contact, the lender contact. They will shuttle it through to us if they believe they need a revision, right? So you're not acting on behalf of anyone except your client. So that's really key to revision requests. So I'm going to go ahead and end there. I don't see any other questions popping up. Okay, it looks like there's one more. I'm going to go ahead and do one more, and then I'll ask Jim after this question to maybe get that link up. Okay, not delivering an appraisal on time. Okay, so they're asking, not delivering an appraisal on time can be considered a USPAP violation, is what this comment says. How late does it have to be? So I think there is some misunderstanding out there. I like the way it's worded. You're saying, it could be considered a USPAP violation, but the Appraisal Standards Board has commented on that, because there was a few years ago a state regulator that decided to come out and say, being late with an appraisal, it could be a USPAP, and they did say, we're only saying it could be because everyone got up in arms and said that's a business decision that has nothing to do with USPAP, and those people were right. And the Appraisal Standards Board did have a Q&A, and then I believe it's published as an FAQ in the USPAP publication. Being late is not a USPAP violation. It could be a violation of the engagement letter, right? It could be a violation of that contract that the client and the appraiser have. And how late does it have to be? Really, we'd need to know more about what are you asking? What consequence? What? To reassign it? To say you're not paying for it? To be asking for status updates? You just want to have consistent protocol in place. I will tell you that when there are cases of being dark for maybe it's 3 or 4 days, or at least 5 days, or at least 6 business days, or something, there are companies that will say we are automatically going to reassign it, and then they sort of gamble on, okay, we're going to try to reassign it and get it back in a reasonable amount of time. So it really depends. To answer your question, it depends on what we're talking about in terms of action to take. But really, if you have a contract that says it's due on the 2nd, of the month, well, on the 3rd, you could say that is a violation of the contract. However, and when I say contract, I mean the engagement letter between the AMC and the appraiser. So we really want to take a look at what do you have in your engagement letter? What have you agreed mutually to do? And also, have you kept your ears open and reached out? Because there may have been unintentional, or there just may have been factors out of the appraiser's control. So hopefully you have a good communication with them, so that if something's out of their control, you certainly don't want to be just reassigning it, because it has nothing to do with this appraiser, right? And they might be able to get it to you the next day, but there's something that's hinging on another party that's out of their control. So I would just advise you to really be reasonable in that. So let's go ahead and take a look at finishing this up. Jim, if we can go ahead and have that pop up there. I really want to thank everyone. If you go ahead and you click through to that, you also see my email and my phone number on there. So if you have any questions, feel free, but do go ahead and go through that link. You can ask me any questions there. I will answer them. You can provide any information to me, and you can also get that coupon code in an email back once you fill in that form. So I wanted to thank you very much. Jim, do you have anything to say to us?
Yes, thank you so much for your time, Josh. That was really informative, and I really appreciate the time. We had a great turnout today, so we appreciate everyone from coming. We did record this. We will, as soon as the recording is processed, you'll automatically get an email that the recording's ready, and you'll be able to watch it after as well, because it had a lot of great material. So I know you're going to want to go back and reference that.
Great. Thank you so much,
Thanks
Jim.
again,
I wanted to thank everybody.
Thank you, everyone. Bye.